Hi, it's Stan Reinford, and welcome to this week's market update for June 10th. Again, thank you for all the great conversations, great compliments. Thank you for the great feedback of using the 10-year Treasury here. It's actually coming across with a warm reception here. Again, the way the 10-year works is the higher we are on this chart, rates are higher. The lower we are, rates are lower. So let's kind of jump into it. A red candlestick means that rates either went up a little bit or went sideways. Green means that interest rates went down a little or went sideways. So we're kind of going sideways right now. Hard to believe with everything that's going on, but let's kind of jump into it. As you're probably aware, oil prices rose again this morning on the news that the ceasefire is completely over at the moment. In fact, yesterday we were under the impression that there was a deal to be done in the next 2 to 3 days. Well, that's all off now because yesterday, as you may have heard, the Iran shot down one of the U.S. Apache helicopters. Then the U.S. Retaliated. Today, Iran attacked 3 U.S. bases, one in Bahrain, Kuwait, and Jordan. And in response, the president basically says, yes, talks are over, but they have a price to pay. So we'll have to see what that price to pay is. But clearly, at this point, there is no deal in the works. And with regards to that, a lot of people are asking me, hey, what's going to happen with interest rates? It's kind of like breaking a limb. It happens in an instant, and it takes a while to heal. This is going to take a while probably to get through, but even after they actually have a deal, it's going to be rocky roads, and there's probably not going to come down right away. But I have some more to add to that very shortly. So the Consumer Price Index, CPI, was released and showed that headline inflation rose 0.05%, which is in line with estimates, but it's still an increase. The three culprits are oil, imagine that, home away from home, and also airfare. And in that, we have the FIFA World Cup series coming up. Well, guess what? A lot of people are going to be attending this. A lot of people are going to be using home away from home things like hotels, Airbnbs, and they're probably going to be paying premium prices for this kind of stuff, along with airfares going up because of oil and things like that. So that's going to put a little bit of an expense with regards to future CPI coming out and future inflation also. So the next Fed meeting is June 16th and 17th, which marks the first Fed meeting that Kevin Warsh will oversee. He's definitely going to have a big decision to make. A lot of Fed presidents out there and the Fed people are pushing for a rate hike. Well, if they increase rates, is that going to open the Strait of Hormuz? Is that going to change housing away from home? Is it going to change airfares anytime soon? Probably not. It could cause some other issues out there. But again, Kevin Warsh has a tough decision to make, rather him than me. Let's talk about jobs. So the Bureau of Labor Statistics, BLS, released its May report showing that the economy added 172,000 jobs, which is double what they were expecting. They were expecting 85,000. They also revised higher for March and April, around 93,000. And approximately, this was a little bit more balanced, this one, approximately 52,000 were added from government jobs, 47,000 from healthcare and social assistance, and leisure and hospitality added about 70,000. So let's talk housing. So for the first time in a long time, actually in about 6 years, first-time home buyer are account for about 35% of the market, which is up from where it had been. Cash purchases are down slightly, and again, those are national averages. Remember, national news is not always local news. Let's talk interest rates. So interest rates right now are in the mid to upper sixes. It's where they are. There's companies out there that are advertising much lower. Be careful. We've had a couple of clients that fell into that, and then those lenders did the step-up effect and everything along the way. If you're really looking for ways to reduce your interest rate, if you're in a market where it's slowed down a little bit and it's more of a buyer's market, and you're looking at offering a little lower sales price on your offer, or if you're a seller or a listing agent that's looking at a property and maybe doing a price reduction, let me know. There is a way that the seller can help subsidize that buyer's payment for the first couple of years to reduce that payment to make it more affordable. call me up and ask me. We do a lot of those different programs. So, and if you're looking for an example in the videos that are in the email that I send out, the 12 or 13 there, see video number 11. It'll give you a little bit of an insight as to what that looks like. But for now, there's a difference between a locked rate and a quoted rate. A quoted rate is whatever can be there today. A locked rate is what we're going to lock at. And remember, looking at these charts down below, interest rates move multiple times a day. What I quote you at 10 minutes ago till now could be two separate things. The market could move crazy quick. So, and anything can change that, whether it's words, whether it's a 10-year auction, whether it's something like that. So, in the meantime, remember that we help clients that are buying or refinancing, whether it is a primary residence, second home, or investment property, and we help with refinances. There's a lot of equity out there. In fact, there's more equity in homes today than there ever has been. So if you're in a situation where you're looking at buying another property or looking at consolidating, give me a call. I would love to review your scenario with you and point you in the right direction. In the meantime, please forward and share. And again, I will see you next week.